To our closing bell exchange here, Meg Green of Meg Green and Associates is back with us this Friday. Hank Smith from Haverford Trust, Tom Lydon from ETF Trends, Jamie Cox from Harris Financial Group. And let me start with Rick Santelli. Let's get your impressions to sum up the kind of week we've had here, Rick.
We're getting the first chapter of a long book on what normalization is going to look and feel like. And those that have been able to have large leverages in positions, whether it's foreign exchange or oil or loans, you see what happens. Leverage has a downside. But many central banks have been doing things that have shielded many investors from some of the sins of such issues as leverage, and we're seeing it all come home to roost. Interest rates is the one area, of course, that has been just kind of trending, and a lot of the recent low yields, like breaching 170 briefly today, are all about what's going to happen on the 22nd. And I have to say, if you talk to the quote-unquote experts, they're saying, yes, Mario Draghi's definitely going to deliver. I don't disagree, but really, it's not the experts we need to be concerned with. It's the psyche of the traders, like with the euros. It's going to be sell what we expect to happen and then hurry up and buy it once it's done. Many on this floor think so. So I'll tell you what, anybody watching, the 21st, 22nd, it's going to be wild.
It is, and we've already seen wild. And Meg Green, where do you think this leaves the Fed? We've already heard a number of members out there talking about the extent to which they emphasize inflation, or they emphasize job growth, or they're saying it's going to be March, or maybe June. We're not so sure. What do you make of all of this?
I can't imagine that they're going to raise rates because we have such a strong dollar. Everybody's piling into the Treasury. The 10 years, Rick, it's under 2. So do we have to actually raise rates to pay out all that interest? I don't think so. I think it's going to stay low for quite a while. I really do. I can't imagine not.
Hank Smith, what do you think?
No, we're still standing by a rate increase sometime in the late spring, early summer. But it won't be a series of consecutive rate increases. I think we might only get one in the middle of the year and maybe one at the end of the year. And I don't think it'll really make that much difference in the scheme of things. But I don't think it's going to be like past cycles where you had these telegraphed quarter-point rate increases at each meeting. It'll be nothing like that.
One and done, Jamie. Do you think that's what's going to happen here?
I think, unlike the Swiss National Bank, Janet Yellen has telegraphed what she's going to do. I think she's a very data-dependent, model-driven Fed chairman, or chairperson, rather. And I think that she's already told us a couple of meetings from now they're going to raise rates, and they're going to do it because they communicate with the markets, unlike other banks. So I think that's exactly what will happen. I do agree with Hank that it's going to be very slow. They're probably going to do a one rate hike and then let to see what the market does, and then go for a couple of more. I think 75 basis points by the end of 2015 is what I think will happen.
Meantime, Tom Lydon, your work suggests that maybe we are, we've talked about in the past several interviews with you, the market still presented some value, the equity market I'm talking about here in the U.S. You think things are getting a little expensive now?
Well, in some areas like financials, for sure, Bill, but areas where there's value is actually in technology. Technology's hot, but not like 1999. One ETF, IYW, the iShares U.S. Technology ETF, has a valuation under the S&P, but did 50% more what the S&P did last year. Rick Santelli is right. We're going to see huge volatility next week if they throw the baby out with the bathwater in technology, and a lot of earnings are coming in the following week. Right. You got an opportunity to swoop in, grab some big bellwether technology stocks that are really the basis of this index and this ETF.
What about healthcare, Tom?
Healthcare a little bit more challenged. I mean, you're going to see with interest rates rising a little bit more challenging in those areas. In technology, Kelly, these companies are flush with cash, so they're not going to be as affected by rate hikes that Yellen may throw at us in the second or third quarter.